All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. No new triggers on the board here today. As you can probably tell by my voice, kind of bummed about that. I don't want to go into the weekend with, with a lot of cash, but it looks like that's the way it's going. So we have Target, Bank of America on the board right now. And Target is at its auto exit date. I talked this morning, could I hold it through? I could, right? But, I don't have a great reason to. And, it is, we're not talking about a great unusual circumstance here. So I am going to just pull it off the board and move on here from Target. So let's see here. 276, 279. I'm just going to do a market order. And I'm filled at 276 here on Target. So let's make sure the alert goes out. But out at 276 on all 13 contracts. So 276. So we end up with a $468 gain on the trade. And it is, it's nice that we're not taking, big losses here during the course of this month or anything like that. But, we're tacking in $400, $500, $700, type dollar gains. It'd be nice to, get moving and start tacking in some much bigger gains. We have the positions to do it, right? We just have not gotten the price movement post signal to take our options in a significant way. And again, I'm not overly surprised given the fact that it is earnings season. And, sometimes earnings season can be a very flat time here for the markets. And, for the overall markets, it's fairly flat. But for the, for individual stocks, you get pops and drops just simply based on the earnings there. So we're going into the weekend almost identical to what we went in last weekend in terms of total challenge gains, but still over 12,000, almost 12,500 in gains. Challenge value here over 15,000, and we have 2880 in cash in play, and the rest of our cash here, the rest of our dollars are waiting to be deployed, and that's about 9,000, 9,200, somewhere around that level. So plenty of cash to put into play on signals that come in here next week. So, grinding on, and, that's what the challenge is meant to do when we're not seeing massive trend. And, so we continue to grind on here in the market. Now, there's a lot of stuff that we could talk about in the market here today, but not a whole lot that I find to be very significant or very game-changing out there. But we're going to start hearing about earnings season. After the first week, we tend to see the aggregate numbers start to come out for, how's earnings season shaping up? What's it starting to look like and everything else? And if you remember last earnings season, we saw a year-over-year contraction in earnings for the S&P 500, right? So it meant that, compared to 2018, the same quarter, earnings were actually lower. This quarter, the expectation is for a 3% contraction in earnings. That's the expectation. You say, well, man, how can the market be at kind of all-time highs or right near all-time highs when you expect another quarter of earnings contraction and, where you get this kind of just, 3% decline from the prior year? Well, a couple things, right? A couple things. Let's clean this up and let's come in here to a weekly chart. And if we take a look at where the market was last year at this time, where the market is now, right? The market's a little bit higher, right? Not a whole lot higher. It's about it's a little bit higher in terms of some of the dividend and forced investment that comes in, but yeah, it's a little higher. And we were the same way last quarter. right? So the market's definitely higher than what it was, last year with better earnings. So what does it do? It makes the market a little more expensive, right? That's nothing new. That's what the market's been for a long time. With some historic type PE ratios and stuff like that. But we know why. We understand the dynamics there. It's not this, oh man, this is crazy. It has to melt, tomorrow type of a situation. And so we go and we look, okay, most of these quarters, over this bullish run, we have seen growth, right? We have seen earnings growth. We've seen revenue growth. When's the last time we actually had 2 quarters with earnings contraction? Well, right back here. 2016 Q1, 2016 Q2. These are the last 2 quarters where we saw earnings contraction. Did it really say anything about the market after that? I mean, what happened to the market afterwards, right? Just boat raced, right? I mean, just blitzed higher. And, it's one of those where for the last almost, 18 months, the market's only fractionally higher, in the last 18 months from what its high was there in 2018. But, this is, that was the groundwork, right? With lower earnings expectations and lower earnings coming into the market. And so one of the reason I show you this is just to caution you on being overly bearish based on an earnings number, right? For the market. Yes, could we see things go down? Sure. But you have to realize that the market's going to go down if the expectation isn't met or if the expectation is missed, right? And the market's expecting a 3% decline in earnings. That's the expectation. So that is theoretically fully priced in. If we see better than expected earnings growth, the market's going to have to price that in, and it's going to get bought up. If we see worse than expected earnings growth, the market's going to have to price that in, and we'll likely see the market, sell off here. So, that's kind of what we're looking at earnings-wise. This week there's some really good earnings stories on the board out there. Bank of America, really nice earnings story. J.P. Morgan, very nice earnings story. We have Microsoft, very nice earnings story, and notice, right? It doesn't necessarily mean these stocks have rocket shipped, higher and off they go and all of that. No, the reaction doesn't always dictate what the earnings were and what the story is. But really nice story here with Microsoft. Just continues to deal with double-digit revenue, double-digit earnings growth. Does it need a little pullback? Is it a little frothy? Is it a little expensive? Well, yeah, it is. But there are a lot of things that are expensive. American Express, this was a decent quarter. I think there's a lot of positives that can be taken out of this quarter. Canadian Pacific, an awesome quarter, right? Blitzed higher on the day of earnings. It's pulled on back ever since. CSX took some of the shine off of CP's earnings, but as we go forward, who's going to outperform, CP or CSX? Yeah, it's CP. And so there's some decent ones out there. In fact, Netflix. I think you have to look at that quarter. If you're a long-term bull on Netflix, is actually encouraging, right? But we understand why it's down, and it's from a short-term standpoint. No, it's going to bleed lower. To go and test 300, it probably will, right? But from a longer-term standpoint, some nice positives there. And so we see a mixed bag. We see a mixed bag of things. Schlumberger earnings, not very good. Not a lot to hang your hat on there if you're a Schlumberger investor, other than to look at the stock and go, okay, that report was terrible. That report, even the conference call, there's not a lot to love. The industry is still struggling in a big way. But, man, they're not selling the stock off in a huge way. And I think it's really interesting. You see Schlumberger's earnings, and they're not selling the stock off big. And you see Microsoft's earnings, and they're not buying up the stock big. And it just tells you, a lot of the news, a lot of the earnings, it's known. We're not talking about great unknowns. We're talking about things that are, relatively known by the big money out there, and so they're not, reacting in in a panic type fashion around a lot of these earnings here. Okay, so that's just what I wanted to comment there on earnings. Let me show you FactSet here. FactSet.com. If you just Google search FactSet Earning Insight, if you're looking for some just good information on earnings, just facts, data, right? They publish this each week. The new report isn't published here yet. Probably come out later here today after the market closes. But they'll show hey, what are some of the earnings? How they starting to shape up? Estimates versus actuals and all of that. There's not a lot of data in this one because it doesn't include this week, so it just includes a few of the stocks that reported before this week, the Microns and the FedExes of the world, the Adobes of the world, but it doesn't have a lot of the banks and all that kind of stuff here in it just yet. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a fantastic weekend. I'll be back on here with you Monday morning, and we will talk to you then. Take care.